on the screen. But for now, let's welcome in our next guest on the show. Abhiram Elswarupu, Head of Equity at BNP Paribas India, is joining in. Abhiram, greetings of the new year. Wish you a very, very happy 2021, first of all. May, the gods be kind to us in terms of health and wealth and prosperity. So you tell us, I know you're constructive on this market, but what have you made of the pace? I mean, it's almost frenzied what we're seeing on the screen in the last 2 months.
Thank you, Survi. Thank you for having me, and wish you and all the viewers a very prosperous and happy new year. Now, with regards to the market, obviously, when they're having a field day, aren't they? But we've been generally constructive on the market. If you take a look at the big themes for 2021, I mean, the start of the whole thing is that the theme becomes that we have a big second half recovery that's led obviously by COVID-19 vaccine being widely available. The second is we are seeing earnings being upgraded. In fact, the last earnings that we had even in India were among the best we've had in a long, long time. And the third is, of course, that the expectation that central banks will remain accommodative. And in fact, our economists think that the Fed will not taper until 2023. So we have 2021 and 2022, 2 full years of very accommodative policy. So this is a scenario, obviously, that's great for equity markets. In addition to all of this, of course, we're seeing a big shift from DM to EMs. Now, this kind of a shift tends to be several years long, and we're just starting to see emerging markets outperform developed markets. This happened over the past 3 to 4 months or so. And as I said, when the shift happens, it tends to last maybe a decade sometimes. So these sort of things are obviously reflecting in the prices. Now, obviously, like what you said, all this is not without risk. The market's going up rather quickly. If you just look at it compared to the target prices that we have for, let's say, the S&P 500 or the Sensex, they leave barely 3 or 4% upside. And that tells you that there's obviously always a risk of a short correction at some point in time. But yeah, the broader theme is obviously a constructive one.
Okay, broader theme is constructive one. Now we'll talk about the broader themes as well. But Abhinam, good afternoon. Thanks a lot for joining us. And again, happy New Year to you from my side as well. Just looking at some portfolio changes, and what really is quite interesting is you replaced Britannia with Marico. Your overall thoughts on the FMCG basket, and is this more of a valuation call?
Well, yes, in terms of specific stock changes, there could be a bunch of reasons, of course, but usually it's a valuation call when we make these kind of changes, and also earnings changes. And when our team makes changes to earnings, some stocks can be a little better off than the others, and that typically drives these changes. But just on consumption, right? What really interests us about consumption, not just in India, but globally, is actually the amount of savings that the consumer has made through this lockdown. And I was just looking at a chart before I got onto the channel, and showed the household savings, especially in developed markets. I mean, that the chart looks like it's a bit of a helicopter taking off. It's a massive improvement in household savings. You started to see that in India too, right? Through the lockdown, we've had people save and invest and also make money in the market. So when a consumer is flush with cash, that tends to reflect in increased property sales, for example, increased four-wheeler sales, and also better consumption. And within consumption, obviously, it tends to move towards the more discretionary side of it. So broadly, consumption is a space that we like. And of course, in terms of stocks, you can have changes here and there by and large, but the theme is a positive one for consumption.
Okay. Abhiram, how are you reading the rally in material stocks, in metals, in cyclicals overall? Because that's where the big bets are being taken, right? That we are entering a new cycle altogether. Do you agree with that? And if this is going to be a new economic cycle, then what would be your best way of playing it? Will it be cement? Will it be metals or industrial stocks per se?
Yeah. So, I mean, this is all part of the reflation trade that we're seeing. And I think in addition to what you just said, the bigger kind of call that everyone's been making here is of a shift from growth to value, and a shift from DM to EM, and also plays on a weaker dollar. Now, whenever you have this kind of an intersection, you will probably see several areas moving up. Of course, mid and small cap is one area to look at. But the way I was kind of planning to outline this whole thing is, first is when you look at value in India, it's going to be quite difficult in this market, obviously, because everything has become expensive, relatively speaking, at least. But within each sector, you could obviously look at maybe, if not the top tier name, the second or third level names, which have not run up as much. And in that scenario, you would probably have, in addition to what you mentioned, you'd probably also have some upstream oil stocks and also some PSU bank stocks that will fit that bracket. The second element is, as I mentioned to you earlier, inflation is a theme for the full year, and that shows up obviously in property prices. So property is one area to look at. You can also play that theme through housing finance companies, for example, and indeed through the overall banking space. Now, when I say financials and banking, I obviously will also include insurance, because I mentioned about consumption, and insurance falls right in the cross-section of financials and consumption. So that's the second way that I would look at it. Third, I already mentioned briefly on consumption. And the fourth is tech. Like I earlier mentioned to you about the US dollar weakening, and historically that's not been great for tech stocks. But when there's just modest rupee appreciation and that coincides with strong demand, even tech stocks tend to do well. And that's probably what you're seeing right now. I mean, even earnings are around the corner, I understand. But if you look at even the deal win data over the past 3 to 6 months, it's been extremely strong. I'm not really surprised that tech stocks are doing so well right now.
Okay, yes. Now let's talk about the real economy stocks, right? Autos have done phenomenally well, especially the CV plays. And cement is making some kind of a comeback. I wanted your thoughts on both these sectors.
I mean, autos is probably the relatively easier call to make in this. First and foremost, as I said, consumption is a good area to be in. Consumers are flush with savings. But within that, our preference is actually for four-wheelers. And if you see the data over the past, let's say a few months or so, you're starting to see, four-wheelers generally tend to outperform two-wheelers, even in terms of pure fundamentals. So I think that is one area. It's a space that we like. There are not many stocks in that, but the few that they are, large cap names are pretty interesting there. Now in cement, as I said, generally we are positive on the whole property area and the rebuilding of the economy kind of a concept. And with interest rates being where they are so low, usually it is favorable for infrastructure plays, cement plays, and so on and so forth. So again, generally positive, but as I mentioned to you earlier, if you would look at just the frontline names in all of these sectors, then obviously you'd start to get concerned about valuation. So you may want to look a little below the absolute, the top names.
So, Abhiram, what about the earlier leaders? I mean, you mentioned IT, but let's say Telecom Pharma, which got us out of this mess, right when the crash happened. Will they continue to do as well, or is it time to move slightly away from those sectors to the ones that you mentioned?
Telecom, we like selectively. It's a space that, at the end of the day, we've had consolidation in the market. There are only 3 major players left now. Balance sheets are improving, and over time, there is, we are of the view that eventually, the prices have to be hiked and raised, and when that happens, it tends to further repair the balance sheet. So telecom is obviously a space that we like. You want to be a little careful about, again, the whole valuation concept, and pick up stocks where whenever you think that the valuations have come down below an acceptable level. Pharma, I think, is going to be much more stocks, especially you had such a big rally in pharma stocks all through 2020. And in 2021, there's still going to be this whole vaccine theme. So there will be some stocks that I think will be a play on that as well by next 6 months especially. And India has a fairly well-developed vaccine mechanism. And to vaccinate 90% of the population, given the size of the country, is actually something that may not take a full year also. So in that sense, there will be a play on pharma stocks as well.
Got that. Okay, Abhiram, thank you very much. Good talking to you today. Once again, wish you a very, very happy New Year. Thank you for joining in.
Thank you so much.
Okay, on that note, we do have to take a break. We'll come back on the other side.